Hi, good morning. This is Julie, J Auto Trading Strategies, and I want to take a look at the charts by BloodHound templates this morning, and especially the Emini and how the bonds reacted with that pullback. So let's take a look at the charts. Here is the Emini. We closed with the high Friday at 23.88. That'll be my pivot. Resistance pivot going into next week. On very little data, we have FOMC minutes coming out Wednesday that may provide the catalyst for the market. And Friday we have a revision to the first quarter GDP, which isn't really expected to show anything. Here is the head and shoulders that's set up on the Unirinkos on Tuesday's sell-off. Following that news, Monday we had a rally in the market, having a market high at 24.0450. And here was the sell-off, and then that first resistance area. And some huge moves. The volatility is definitely back in this market. I just highlighted a portion of this so that you could see on my next chart how to go inside this and trade it when you get a direction that you want to trade, long or short. See if I can do this again. Well, it's not cooperating. So on your smaller time frame, this is too low. I need to change this back to a 2-4. There we go. If you want to go long, you just put your BloodHound template on long and write it up. Stay out of the pullback and take it when she turns back around. Now here was the short, so if you want to go short, of course, you want to trade it short or just hit your inflections inside of it for more entries. But long or short, it's very easy. Here was the setup to take those shorts using BloodHound to enter the trade. And of course, like I said, once it goes sideways, it stops printing short until the move kicks back in. And again, if you want to go long, just change your template to go long. Or leave it on super trend and take them both ways. Or take him on the inflections both and take the inflections both ways. Lots of ways to trade this on the shorter time frame. But overall, what I like to do is get a direction, feeling of which way the market's moving, and then just stick with that one direction, especially if you have your moving average crosses that you're looking at, or the volatility directional movements. Then you know that you want to participate in the market, and you can pick a support resistance area or a previous day high low or something like that and come in. Now the best way to trade in a downtrend is to just enter, directionally when that direction sets up, and either take it on the higher time frame or the lower. You can actually take one on the higher and then come in and add positions on the lower one. So if you're long one here, leave that runner running, runner going, and the second one you come in and out of on the noisier lower time frame. So you can be adding, closing, adding, closing, adding, closing on your second or third contracts while you have a long runner running. Many different ways to do it, but we want volatility. We just didn't want it to go sideways like the market has been doing. Now, with that said, be careful because the bonds have not rallied back. The bonds moved opposite to what the E-mini did for that sell-off. When the E-mini was selling off, the bonds were rallying all week. Isn't that some nice moves for $31.25 a tick? Get in on those turns, right? And then go on your smaller time frame and capture those for $31.25 a tick. And that's how you do that. But like I said, the bonds have not come back as far as that pullback, very limited and spiky. The market was fighting it. The pullback has not really happened. We're still moving up. So not really any turnaround like we saw in the E-mini. So that's telling me something. But Wednesday will be our day to get the Fed's direction. So far, they seem like they want to continue raising interest rates into weakness. If we look at the pattern of what's going on, they will be raising into weakness. Um, the consumer spending is moving only modestly higher while inflation is moving in the wrong direction. So they're raising into weakness. The only glitter for growth is that manufacturing sector, which has had a stellar rebound after a little bit of a March weather dip. April was huge number in manufacturing. So we'll watch closely those manufacturing numbers coming out and hope that that employment in manufacturing heats up a little bit. Construction this week on the calendar, we've got new home sales and existing home sales. And again, that first quarter GDP revision coming out Friday. So all in all, a very not so stellar week for the numbers, except for the minutes of the FOMC meeting. And so when the market hears that the Fed is intent on raising interest rates into weakness, we might see some market movements late Wednesday and Thursday. So keep your powder dry, keep your ears open for any news coming out of Washington that could cause this market to make a move, but otherwise we're probably in the small ranges again for the summer, and just keep it directional as much as possible and wait for your setups, wait for those pullbacks, and wait for those turns, okay, and take your trade. So this is Julie, J Auto Trading Strategies. Hope you have a blessed week, and we'll talk at you later. Thank you.